The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
Well, there's no ticking time bomb left today. We're at 2669.90, up the 34 points on the S&P cash. Volume's about we'll call it 4.8 billion shares. So this is options expiration day. Actually, a little bit more volume than I thought we would have for the day. And of course, I guess I have to say that I was wrong. I thought that the market was wishing that there's some kind of trade deal. And it certainly looks like at least somebody thinks that there truly is a trade deal that's already that's apparently already on paper. I can't see a reason to run the market up on every time there's a new trade news thing come out, unless people, at least some people believed it. One person actually said, "It's a trap." What's general? Someone probably what would you call it? Said that's what it was. It's a trap. All I remember is that all day long one day, I was doing other stuff and turned the TV on and forgot to ever go back and turn it off. And it was Star Wars all day long. And it was a promo. And that's all they played was this. I want to say General Akbar. Is that who it was? It's a trap. Anyway, I always thought that all day long, that's all I had. Now I've got it in my head forever. But I guess it's a big meme on the internet. So is it real or is it Memorex? I don't know. It's one of those things where I have to say that I'm always skeptical. I'm not cynical. I don't think so, but I am skeptical. Until anything's signed, I don't think that you want to put a lot of money on it. Market certainly looks, at least to me, doesn't seem to react anything to any of the shutdown. So at this point, I can say that at least no reaction to the news on shutdown issues. So it's got to be something out there. We've had kind of light volume through the weeks. When we got into resistance levels, we've gotten just a little bit more and broken through them. So we'll look at them today. So the question is, should I remain skeptical or just go whole hog in? Just become a true believer? Well, I don't think I'm going to change my personality anytime soon. So I was kind of wrong on my short-term trades. Had some payoff on a long-term trade today in the Tech Insider. So I get a little bit of rock and roll, a little bit of country. And I'm going to try to figure out what's going on in the next 3 days. Because I can tell you that they certainly act like they think they've got the beef, but somehow I have a feeling that the picture that they put on that nice menu, the beef won't look anywhere close to that size. It'll look like a little shriveled up piece of $1 Burger King hamburger. And, of course, what they'll have on there is a $10 Shake Shack burger in the picture. It never looks that way. Somehow I have a feeling that when we get to it, if there is a deal out there, it's probably not that good. I always thought that it would take 6 months or a year of fighting to get that done. So maybe we have, maybe we haven't. We'll see. And, again, this is kind of where I was looking for the market to top out. Not on price, but certainly on time, as the run from Christmas, the day before Christmas, day after Christmas, actually started. I bought the lows. I didn't hold it long enough. So you always want to, again, I'm always skeptical of those bearing gifts, especially Greeks and horses. If they give me a horse and they're Greek, I'm doubly skeptical. But not a little bit more than that. Anyway, so as a weekend starts, where we're going to have a 3-day weekend, one of the things is that the character, if not the direction of the market, tends to change. And the way that we've come up this way always makes me think that when we do get a pullback in this market, that it'll be a much, much choppier. Getting some signals that I think are interesting in sector oscillators. Well, maybe we'll get to that today. We've got a lot of charts to look at. We've got some, what do we have? We've got some history to get to. But the question is, do I have enough time? Yeah, I got 2 minutes. Let's do our history, and then we'll get into it. Hug-a-bond. Oh.
The following takes place between 2 p.m. and 3 p.m.
Yeah, there was a Family Guy Star Wars episode. It's a trap. There's that. It's a trap's been around for 100 different things. Anyway, history.
And it's all just a little bit of history repeating.
On this day in 1912, after a 2-month ordeal, the expedition of British explorer Robert Falcon Scott arrives at the South Pole, only to find out that Ronald Amundsen, the Norwegian explorer, had beat them by over a month, put a big stick up there and said, "You're late." Disappointed, the exhausted explorers prepared for a long and difficult journey back to the base camp. Weather on the return journey was exceptionally bad. 2 members perished. Scott and the other 2 survivors were trapped in their tent by a storm only 11 miles from their base camp. Scott wrote a final entry in his diary in late March. The frozen bodies of him and his 2 compatriots were recovered 8 months later. And of course, not only are you late, but you die being late. And of course, mostly forgotten, other than the fact that a lot of these adventurers, they tend to die a lot. And they tend to die in places where it's not easy to get their bodies back. There are apparently a ton of bodies laying around the South Pole of people that didn't quite make it there. Second only to climbing mountains. Apparently, there may be upwards of 125 bodies littered all over a giant hill that everybody thinks that they must climb because it's there. And I saw a little bit of it, but it's kind of weird. And of course, they don't take their trash with them. So the whole thing is becoming a giant trash mound with lots of dead bodies. And of course, it's always cold up there. So those bodies never really decay. They just kind of look scarier and scarier each year. But yes, to Mount Everest. But yeah, don't you think that if you're gonna go somewhere like that, maybe you need to post a bond that'll allow everybody to either pick up your trash and or drag your body back. No, we don't have these kind of elephant graveyards just laying around in weird places like the top of 27,000-foot mountains in the South Pole. Just my thought. We'll be back in a minute.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as a gentle reminder, although it's probably not going to be a big deal, I know it's been in the news so much, but PG&E comes out of the S&P 500 at the close of the bell today. Teleflex, the medical device manufacturer, will replace its symbol as TFX. May say a little bit more about it after today. Always get a little bit more light on a stock in the S&P 500. I don't know if it's going to make a lot of difference in the long term, but that's kind of it. So that's kind of probably the only thing I really think about significant for action, well, for general news, let's put it that way. Let's go ahead and start looking at some charts to see the worst. Tesla is getting absolutely slammed on a day when the market's doing much higher. As most people know already, if you've listened to anything, the news was that they are dropping about 7% of the workforce at Tesla. So this one's kind of the odd man out, down fairly far. We'll look at Netflix next. One of the things that you really have to look at in Tesla is something I've been talking about 3 or 4 years, and that is that this thing has always been a house of cards. And one of the things you want to look at the most is when these stocks start to fail. And the reason is because generally in a euphoric market, a lot of people and a lot of things can kind of get away, or you can get away with the things going on. Tesla has one big problem, and that's it's got a bunch of bonds and other things that come due in March and May. And if this thing isn't over like $330, it's going to be in a world of trouble. So keep an eye on this, especially as we get into March and May. But my guess is that, as I said in my newsletter, when this thing gets into trouble, I expect the stock market to look at Tesla as a drowning man and find every anvil it can and throw it at him. You got to think back to the way that the market treated the financial stocks in 2008. What you don't want to be is on the wrong side of history on these things. Again, I've thought the stock never was worth more than about 40 bucks. One of the other things, it wasn't that bad earlier in the day, but again, the news flow continued on, and that is that Ford is going to be piling on with a competitor with a Ford F-150 electric vehicle. Of course, Tesla had been talking about making semis and a bunch of other stuff. The problem is that if they were ever going to make their production goals, they needed about $18 billion more. They're not going to get it. And in fact, Musk has been acting a little deranged lately. For SpaceX, the other company he has, they went out and built this kind of mock-up of a capsule that he says they're going to test. And it's never going to go more than about 4,000 feet in the air. But it's all rather bizarre. Certainly, we can see the effects of the last 2 or 3 months on the downside in the market. He was unable to get additional financing to build his BFR, which is a big, I'll let you insert the word rocket, BFR. No one really wants to get into that business. They think that it's probably better and already handled by other rockets. You know, maybe one day he gets to build the thing on an assembly line. But at the moment, everybody's kind of saying, you know what, Mr. Musk, I don't know if we're going to throw a lot more money your way. And in the last couple of 2 or 3, well, it was been a month, he's been building this thing that looks like an Airstream trailer out in the middle of a parking lot, and just seems bizarre. And you know, it's kind of like your CFO. You want maybe your CEO to be a little bit of a poker player, but you don't want your CFO running around doing drugs and having a wild personal life outside. You kind of look for Mr. Milquetoast. You don't look for the giant riverboat gambler as a CFO. And apparently they kind of look at even Mr. Musk as being just too much of a riverboat gambler. Anyway, I don't think we talked about it last week, but probably the big standout from the Consumer Electronics Show was also another electronic vehicle called a Rivera. Rivera? I think maybe it's called Rivera, but a really tricked out SUV. And again, you got BMW, everybody else in the world coming on. I suspect this is going to be a tough year for Tesla. One of the other clues that you can look at in the long-term breakdown of stocks like this is it'll hit some kind of dramatic high in shorts. In the case of Tesla, I think at the high, it had a 45% short interest. Spent about a year and a half at about 40. It's gotten down in the last couple of months to about 20%. And generally, you'll see something like one of these highly shorted stocks get down to that 20% level, half of the monstrous level it did before. And at that point, generally, you've got enough weakness in the stock to start seeing rather big breaks. If you put this on an ABC on the way down for the expansion, if I'm right on this, on the last one, that's the A. Make that one Mr. B, and we'll make a couple days ago Mr. C. And that sets up a $266 low for a 1-to-1 ABC. A 1 to 382 takes you to 233. There's a couple of longer-term lows in Tesla that come back around 244 and 252. And there's also a gap right under that 260 level. My guess is that that's probably where what this is doing is going. You just didn't have enough energy off that December 26 low up to the recent high. This news, and of course the news that they're going to have a lot of problems when those bonds and notes come due in March, it's probably not going to be happy times. And again, I think at least on the good part of his businesses, that being SpaceX, where everything looks fairly good. I think that they don't want to throw a lot of money in the event that he thinks that he's going to use that money to buy Tesla and bail it out like he bailed out the Solar City event. And of course, you have to think of a lot of things that he's thrown against the wall, and few have stuck, like all the battery products and the solar cell tiles that go on your roof and a ton of other stuff. You know, there's a lot of pie in the sky, wishful thinking in Wall Street. And I think he's going to be remembered as kind of the Barnum and Bailey, greatest show on earth. He'll have some hits. He's going to have a lot of losers. We'll be back after this.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
One of the other stocks headed lower today is Netflix. It's got this gap up from the 15th that had 21 million shares, now being filled with almost 22 million shares now. So you're going to have a little bit more money volume than this gap higher on the 15th. My thought was that support came in right around 330. So you probably have a few more days, but there's this gap. Let's pull in here a little bit. This gap that comes in right around 330. That's the gap up on the 11th. You had some decent volume there, 19 million shares. But again, That's probably where it's going to come out. I don't know if there's anything in the earnings call that was life-threatening, but as I said yesterday before the earnings, I would not be surprised to see this thing miss. Again, they've done price increases a couple of times, but the PR effort that they made earlier with Bird Box, and yes, it was, as far as I'm concerned, a propaganda effort. It wasn't like it was this great movie. People that watched it on Rotten Tomatoes give it about a 60. It's in a kind of an average movie, but it was supposed to be the scariest movie of all time. I mean, it's kind of like the stuff that used to work on people back in the 50s and the 60s. I said it kind of reminded me a bit about the people, the girls they used to pay to scream and faint in front of the Beatles and Elvis. Yes, they were all paid for. None of those kids actually did it unless they were following other people. So there is kind of a bandwagon effect if you do a few of those. In fact, one of my good friends from childhood, his dad was quite the character, and we'd help him out occasionally. And we went down to a big auditorium downtown, and he said, "You want to see something neat?" We all had hard hats on and clipboards and things around our necks. He says, you can walk anywhere. Put on a hard hat, looks like something on a badge. We can go anywhere we want in this auditorium, whether or not it's roped off or not. There wasn't anything going on at the time. He was actually doing some work down there. But he said, you see all those people over there? You see them? There's like 20 people over there. They were maybe 20 or 25 feet away from him. He said, everybody now just point up there to the far left corner of the auditorium. Just point and look and act like you're saying something. And we did. And by the time, about 2 minutes later, we had everybody in that group, 20 people, 25 people, whatever, looking up in that corner. So there is kind of a bandwagon effect, whether there was something there or not. They probably started imagining it. But Netflix did that. They did a few other things that always made me feel a little bit iffy. The price range has been off and on. They've had 3 price raises. I think this one's going to be $3. One of the times they lost almost 4 million customers. The question is whether or not another price hike would indeed get them to drop some customers. We'll see that in the next couple of months. They didn't get that many new people. Actually, the way that they rolled out new subscribers in the U.S. is a little murky. It actually is more like 1 million people, but because they had about 500,000 people, credit cards didn't go through on Christmas, and then they go back through as soon as they're canceled. They actually count those as new subscribers. There was about 500,000 of those folks. You only had about 1 million new subscribers, so there isn't a lot. And that $3, none of it's going to go to making better programming for you here in the U.S. Pretty much the biggest slice of the pie is for trying to get into foreign markets, or at least outside the United States. So the question is, in fact, a handful of big media people have been commenting on it this week. At what point does competition really start to hurt Netflix? And a lot of stuff going on in there. But I kind of think that they've had at least a short time watermark high in their business. And it's probably going to take another year, year and a half, maybe even 2 years for the amount of money that they spend on content and divvying that up in the correct percentages around the world. Right now, they want to get a lot of business outside the United States. The problem is how many people actually have significant internet service in these new countries, and the answer is fairly small. So they don't have anywhere close to the percentage of people. They can probably get to 80% of the U.S. market. It's much smaller around the world. And again, actually going into China or somewhere where there's a lot of people is problematic. Same thing with India. A lot of people already doing their own streaming over there. A hard nut to crack. And of course, that's where half the world's population is, India and China. Pretty big there. Anyway, we're going to look at some other ones. Oh, last one out here was, what was it? Now I'm going to think about it now. What was it last night? Yeah, I'll think about it later. Let's go ahead and start looking at some charts. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. You can look at your charts too. Anyway, ABM Industries, looking at a handful of these stocks, filling the gap down for this one that had 2.5 million shares with 300,000 shares here so far. ABM Industries, symbol is ABM. You might want to take a look at that. Energy was actually fairly good off the lows, though, so it doesn't make me think that this one is one I want to jump on the hand grenade on. AGCO. What do you have out here? AGO going into a 637,000 share high, the August 7th, with 437,000 shares. Probably going to be a little close on that too. Again, the market kind of, you hit a lot of these things on light volume, but it's kind of improved over at least a little bit over the last couple of days. One of the ones where it hasn't, we talked about CenterPoint Energy. This one did go above the previous high. It's closing back below and on light volume. 3 million shares today compared to the 9.4 million shares we go back into on December 17th. That was $29.62. You went 20 cents over that and closed back in. The energy is fairly light off this December 26th low. So there's a fairly decent candidate for a decent sized pullback. Another one that's come up here and filled the gap, just touched it today, was Cree. Had a gap down with 4.8 million shares. Today you're into it with 700,000 shares. We talked about CRM yesterday, acting kind of weak as it goes back up into previous highs. You got a little doji out here today, 153.27 as the high. It did break above the previous highs. You wanted something like about 7 million shares for the December 3rd high, but you can also look at that as the December 8th high at 4 million shares. So again, probably not the best stock to short because everybody and their dog on Wall Street in a fund owns a big hunk of it. Hard to go after the stock we love best. We'll be after. Back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
It's a trap. It's a trap.
It's a trap. What else do we have going on? Yes, I got an email up here about crude. Yeah, the move in crude. I think all this stuff, apparently everybody's convinced everybody else. Like I said, if you just stand around and point long enough, everybody's going to look. And I think we've got the self-fulfilling prophecy on all this. Of course, last I have on crude here is 53.85, up about 3.4% on crude, and 2.5% on Brent, but just a little bit of that. I don't know. It's just I'm skeptical until I see it signed and ready to go and find out whether or not it's a dog or not. Okay. Anyway, let's go back to some charts out here. Do I have any more emails here? I get everything else. We were talking about Canadian solar, and I guess I'm going to probably talk about this a little bit too. Down on the 9th of November, that was at 4 million shares compared to what we have now, which is just touched it today with, is that one? Yeah, 328,000 shares. And reversed down a little bit. Why some of the bigger stocks out here seem to be running with the big dogs. A lot of the smaller, less well-known stocks seem to continue to be hitting these gaps and pulling back a bit. But not it. Now, one of the other things I saw in this morning was a whole lot of signals popping up in the emerging markets. You have a little bit more down in the EDZ today, but maybe you get a little bit more of an extension in these, but a lot of these things are being set up very interesting in these bear setups, saying that maybe this is the end of it. There's another one out here. Can't remember what it was. It was in this. There's EDZ and ED something else. I'll think about it here in a minute, but I remember looking through a handful of these that it all had something like that. What's the EUM? Emerging markets. This is another short one out here, but very light volume the next couple. Now you got a gap in a lot of these, just maybe 1% or 2 lower. Maybe that's the end of these extensions from that December 24th high. But these short bearish all look like maybe they're completing the second ABC on the way down. And most of them have fairly light volume off these December 24th highs. So when we come back Tuesday, I expect the market to change, as they do tend to change their character. But I'm going to be looking at these emerging markets and see whether or not there is maybe some kind of, well, if we're looking at the bears here, we're probably talking about some kind of high in the positive side of it. Just saw so many of them That was it. We talked about tech data. RWM, take a quick look. ProShares short Russell. Got a little tip down there. To me, the bigger pattern out here was the IWM itself, and it was a confluence level that it did break through. Let's go back here to the that one. I was very surprised that it broke through. I mean, it was kind of a half-hearted yesterday, and again, a little bit more today in the IWM. That confluence level generally works about 80% of the time, maybe even 85% of the time when it's this narrow and in an ETF. So I was willing to give my short position a little bit extra rope out here. Now, the question is that it's broken it. You give it about 3 days, and if it's still above that confluence level, then you generally have to suggest that it's going to run to the next high, and that would be the 157.90, which is that November 8th high. So we have broken it. There's not a lot of volume comparatively, more than yesterday, though. Let's see, what 21 million shares compared to 19 million shares yesterday. So you've got a lot of volume. Now, what you would like to see this thing is consolidate for a while, maybe a handful of days, if you're bullish on this. A extreme bearish scenario develops with a close below 143.81, though. So you're above it. Now, maybe we get a pullback, maybe we don't. If this thing just goes sideways for a handful of days, then it is more likely to go hit 170 or 157.90 on these. And we get quite the extension. We were talking about Twilio the other day, too. I wanted to check back in this one and see how it did. You got a little doji out on this one, 3.2 million shares compared to 4.6 million shares. You really went up on 25 million shares on the 7th of November, and that's what you've never really busted. No sign of strength. And again, that's kind of problematic for me in suggesting and not being skeptical, not cynical, but skeptical that there's some kind of great deal in. And that is just because there's no sign of strength as we've busted out through some of these highs. Now, maybe we get that next week, and I'll be glad to say I was horribly wrong. But at the point, we still have markets that are susceptible for fairly succinct and swift reversals. Iron Mountain, this is the company that bought a bunch of old copper mines to put data in. And those copper mines, just natural shielding. I know that in the military, what they do is they cut out rock, and they put copper screen up against the rock and then shoot gunite, which is concrete, like they do on pools to the side, and shoot that all over the rock. So you've got kind of a 100% metal layer. Well, with a copper mine, the copper acts like that normally, so you don't have to worry about shielding in case the little rocket man from North Korea decides to drop a EMP on you. So these guys own a lot of mines, and they hide everything down that shaft. This one looks very interesting from a short perspective in that there wasn't a whole lot of energy off this December 26th low back up to this high. Yesterday, you had 1.4 million shares looking at 2.8 million shares back on December 17th. Today, you got about 1 million shares as you go above it. You're into a big supply line that goes back from June 13th all the way across. So you can probably, there's a handful of stocks out here that didn't have much energy on the way down, didn't have much on the way up. This one had a lot of energy on the way down, significantly pulled back on the way back up, and significantly has lighter volume at the top. Not exactly sure why this would be problematic. It may be because so many people, in fact, I saw an ad for Amazon this week. We'll talk about it when we come back. But this is all about hiding all your data. And but they do a little bit more, like you can take your paperwork and shove it in the mountain. And of course, even a direct nuclear strike probably ain't gonna hurt it. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to go to the phones, and that is Sam in Melbourne. How you doing today?
I'm doing all right. Dave, I established a 149 put on Facebook, and I took some heat today.
Mm-hmm.
But like right around around 220 or so, the Facebook, taking that with huge volume on it. Now, do you think I should stay in it or to try to get out?
What month?
It's for February, I believe it's for February 1st.
So it's a weekly. It's not the monthly. Yeah. I don't see a lot in this in the short term. So the 15th is the monthlies, and the first Friday of February. I don't see a lot in it. I do see kind of what I think you're looking at, which is you had a nice strong pullback from December 12th down to that December 24th low with some energy. It's been a long slide up with lighter volume. I don't see the end of the world coming for this. I don't see any higher prices for it either, though. This thing could go sideways for another year. There's certainly the one thing that the Democrats and Republicans agree on, and that is there's going to be some kind of legislation about what you can and can't do and what these guys can and can't do with your data. And that's, I mean, that's how these guys make money. They're so busy selling literally your data to everybody and your phone calls and your connections. And that's probably going away. So I can understand the idea. I just don't know if I see anything right here. The volume's about the same as the previous high. I think when the government gets back into action and everything else, probably one thing they are going to do is agree on some legislation, and that probably will continue to put pressure on Facebook. But I think that's a few months down the line. Thanks for the call, Sam.
So looking for an exit point there.
Yeah. Yeah.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.